Is Donald Trump about ready to screw up our real estate market? Or is he onto something brilliant like FDR was with his 30-year mortgage? I have got my infamous lender, Dave D'Souza, here out of Glendale, California, joining us today. Welcome aboard, Dave. Let's talk about this.
Thank you for having me, Cash. Always a pleasure. Good to be with you.
Likewise, buddy. Likewise. Hey, so let's talk about this new proposed 50-year mortgage that's on the table right now. And I know that Trump is working along with Bill Pulte, CEO of Pulte Homes. What's your inside knowledge on this that you could share with our viewers out there?
Well, as far as inside knowledge, my contribution is largely mathematical. The advantage to a shorter term loan, like a 15 or 20 or a 25, is that you get a lower rate of interest, and over the life of the loan, you pay cumulatively a lot less interest. That's the long-term savings. However, the benefit to a longer amortization, such like a 30-year or even a 40 or a 50-year, theoretically speaking, is that while you may pay more interest over the life of the loan, you get a lower mortgage payment. So if your objective is to absolutely pay the lowest amount of interest that you can over the life of the loan, you take a 15-year. What's the challenge for a lot of people right now with where home prices are is they would love to take a 15-year loan, get the lower interest rate, but then the payment for that becomes so much more expensive.
Yeah, I mean, we got to be real today. We're in a position today with our real estate market and our economy where we're in an affordability crisis at the end of the day.
Exactly.
And so I see the Pulte and Trump coming up with this and bringing it to the market to improve the affordability. At the end of the day, that's just giving buyers another choice, another option that they could exercise if they cannot afford a 30-year or 15-year. Forget it, right? Well, tell me this, Dave. Are a lot of people going for those 15 years right now, or are you getting more of them going for the 30 years today?
No, I would say the majority of people want a 15-year. They want that interest rate. They want their home paid off in 15 years, but they just can't afford the payment. I'm actually going to offer you an exercise just so we could have some hardcore numbers to offer your listeners on something like
Okay,
this.
let's do it.
So what purchase price would you like me to use where I could illustrate what the payment looks like on a 15, a 30, a 40, and a 50-year mortgage, just to illustrate my point?
Well, just kind of
What purchase price would you like me to use?
we have people listening from all over the place, so in different states. But let's talk about 400,000 average price point here.
If we have a $400,000 purchase price with 20% down, that's a $320,000 loan.
Okay.
If you're looking at a 15-year fixed, and let's just say for the sake of argument, you're looking at a 15-year fixed at approximately 5.75%. Actually, let's say 5.625%. Your payment on that mortgage based on a 15-year amortization, this is just the mortgage payment. This doesn't include taxes and insurance, but the mortgage payment is going to be roughly $26.36 a month. $26.36 a month. And if you can afford that, your house will be paid off in 15 years.
15.
Now, if you want to go and do the same comparison for the same purchase price on the same loan, and now you're talking about a 30-year mortgage, and you're looking at something closer to a 5.875 interest rate. Now that payment drops to $18.93. That's a pretty notable drop in payment.
Yeah.
So the downside is, yes, you're going to pay a lot more interest over the life of the loan. But from a monthly basis, from an affordability of being able to afford that monthly payment and put a roof over your head on a house that you or your family will one day own, you've now dropped your payment to about $18.92 to $18.93 a month on the same loan. Let's just say for the sake of argument, and I'm kind of going out on a limb here because I don't know what 40-year and 50-year rates would be, but if you were to take that to a 40-year loan, okay, on a 40-year loan, that payment now drops to $18.17 a month. Not as significant as a drop, but it is a drop.
Right.
And then last but not least, let's just say you were to say, okay, let's talk about a 50-year mortgage. If we were to look at a 50-year mortgage, that payment then drops to $1,800 a month.
That's on what kind of interest rate? 5.85?
No, because the longer the term goes, the higher the interest rate goes.
Okay, so what's
So
the point?
whereas you may be looking at 5.9 or 5.875 on a 30-year, you're going to be looking at something closer to 6 point on a 50-year.
Gotcha.
Because the longer the term of the loan is, the higher the interest rate is.
Sure. Okay.
So,
I wonder why.
you know,
Why would that be? Why would they keep the interest rate higher just because it's a longer one?
well, typically it's because the investor doesn't know what rates are going to do. So the longer you've got, the longer that the investor has to hold that loan,
Mm-hmm.
the more of a risk that is to the investor. And the more of a risk, the more the rate.
Yeah, that always threw me
So
off. So
a 15-year is always going to be less than a 30-year. 30-year is always going to be less than a 40-year. And a 40-year is always going to be less than a 50. So let's just say you were roughly looking at a 50-year loan at 6.375. That's actually a payment of about 1773 or 1774 a month, as compared with the 30-year at, let's see, 5.875. You're looking at for that same loan, the payment of 1893. So you can see as you go higher in loan term, meaning from 30 to 40 to 50, your interest rate goes up, but the payment goes down because you're amortizing over a longer period of time.
right.
Now, if you're looking at how much am I going to pay over the life of the loan, absolutely, the longer you keep the loan, the more you're going to pay over the life of the loan. But there's two kinds of people out there. I mean, there's a lot of people with affordability that aren't thinking about when is my loan going to get paid off. They're thinking about, can I afford the monthly payment? And so from a perspective of just purely theoretical, if you could not afford to pay $1893 a month on a $400,000 sales price, but you can afford to pay $1773 a month for that same house,
Right.
then a 50-year mortgage is your only option. And here's the best part. And there was a lot of backlash and a lot of people throwing a lot. I'm not advocating for or against the 50-year, but strictly from a theoretical perspective, you don't have to keep the loan for 50 years. You could take a 50-year amortization. So when your bills are high, you pay the 1773. But if you happen to have a month where you have extra money, you can apply that towards the mortgage. And you can certainly take a 50-year loan
Right.
and pay it off in 30 or 40 years.
Right. Right.
There's no law saying you have to keep it for 50 years. But if even despite that 50-year payment, you're still struggling to try to make your other bills, you're going to be very grateful and very thankful that you have the option
Yeah.
of that
Of course.
50-year mortgage at 1773 versus a 30-year at 1893.
Yeah. Dave, there's been a lot of controversy over this. It hasn't even happened yet. It's just it's a proposal right now. I hear that there's a lot in the works on this thing and they're trying to make this happen. There's a big push for it right now. And Pulte, again, bringing this idea to Donald Trump, and Trump liked it. Didn't take him long to think. From what I hear, it was a quick decision. Like, he liked it. Let's move forward with this. Let's make it happen. I'm sure they're now working on different regulations and how this is all going to work with things like interest rate increasing from the 30-year to the 50-year. And there's got to be some constraints on this. I'm sure they're working all those things out to see if it will make sense to bring it to the table. But so much controversy. I went through YouTube and I went through all the different news channels this morning and yesterday, and you hear they love it, they like it, or they hate it. And this is what I'm seeing all over the board. It's like crazy. So let me ask you, Dave, you've got a lot of background in this, a lot of experience. You're boots on the ground on this. You're in the field. What do you think? Do you like it, or do you not like it, or do you hate it?
I would say this: if I had the option of taking a 50-year mortgage, me personally, and this may not be true for everybody, I would take it, because the way I look at it is it's an option. It's not a requirement.
Right. Correct.
It is an option that I have. And if again, to go back to my example on the price point that you picked, 400,000 with 20% down. If you can afford 1773 a month, but you cannot afford 1893 most months, well, then a 50-year mortgage is your only option. And if there is no 50-year, then you're just not going to buy a house.
Right. Exactly. And you're going to remain.
And I think, I'm not downplaying some of the different angles, or I'm not setting aside or diminishing people's views on this. But the point that I want to bring to people is nobody's holding a gun to your head and saying, you got to take this 50-year mortgage.
Exactly.
It is being presented as an option. If you don't like it, don't take it.
100%.
But from my personal perspective, having done this for over 33 and a half years, from a purely theoretical perspective, I think it's a valuable option to have for people. Again, to go back to my example, if somebody wants to buy a $400,000 house and they're just stretched at 1773, how are they going to afford 1893?
Right. Right. Dave, FDR came out with this 1948, just shortly right after the Depression. 1929 and 1939 was our Depression. And there was a big problem then, too. And before that, the average loan term was 5 to 10 years. That was it. That was your choices, 5 to 10 years or somewhere between. And they did have a 50% down required and a balloon payment. 50% down payment, balloon payment in 5 to 10 years. What? No.
Can you just imagine how many people in this country would own homes if those were the requirements now?
If today, if they own, no, nobody would. Nobody would own a home.
Yeah, there'd be a very small percentage.
Yeah, it'd
And
be,
so
it'd
it
be the top
comes
1 or
back
2%
to-
of the country. That'd be it.
Yeah, I come back to my point, whether you want to do 15 or 20 or 30 or 40 or 50.
Right.
You have the choice. To me, I'm a person that looks at options. And I have a very simple perspective. What is the issue? What is the drama? What is the backlash about just having another option?
This is what I don't understand. If you're out there and you go look at all the different channels, the social media, the YouTube, the news, you're going to hear so many different opinions of this. Some think it's horrible. It's like planned disaster and all these different things. It's just another option because guess what? One size does not fit all in this economy, right? Sometimes 200, 300, 400 a month in savings on a mortgage could mean somebody could actually buy a house. For you, you might laugh at it. That's peanuts. That's nothing. Why would someone do that? Well, because they don't have another option. They don't have another choice. And
Well, let me give you another example to bring this a little closer. In the markets that you and I do business, it's kind of difficult to find a home for 400,000. So let's just say, for the sake of argument, we say something a little more realistic, and let's just say we up the ante and say, okay, what about on $1 million purchase?
yeah, that's a good number. Yeah.
On $1 million purchase with an $800,000 loan, or even an $800,000 purchase with a 640 loan. Now, the difference in payment is not $120 a month anymore. Now it's $240. And that's going to make even more. I mean, just to give you a rough idea of an example that I'm going to use, just ballpark. And this is not unrealistic,
Dave,
for where you and I
have
do
to be
business.
higher than that. That's going to be more than 100. What do you say, 140 or 240?
Well, let me give you a very concrete example. Let's say we're talking about $1 million house, which is not unrealistic for where you and I do business.
Not
It's
at all,
actually
yeah.
quite close to median. And you're looking at an $800,000 loan. On a 30-year fixed at 5.875, your monthly mortgage payment, just the mortgage itself, not including taxes and insurance, because that has nothing to do with what type of mortgage you choose,
Right.
is $47.32. $32 a month on a 30-year amortization. You take that same house on a 50-year amortization at 6.375, and that is now $44.34 a month. So you're looking
That's
at
$300. It's
$44.34 versus
$298.
$40.
It's $298.
Sorry?
$298 difference, right?
Let me just take a quick look and see. Hold on 1 second. 600 months and 6.375. I'm going to do a quick calculation here, but anyway, just to give you a rough idea, even if the interest rate were the same, and you're looking at something like that, on a
Let's do
30-year amortization, you're looking at $47.32.
Let's do the math on that. I want to see if I'm right.
32, and if you're looking at a 50-year amortization, even let's just say you're looking at a higher interest rate of 6.25, you're down to $43.59. So if you subtract 43, let's say 43.60 from 47.32, that's a difference of, let me just do the quick calculation here, 47.32 minus. So even accounting for the fact that the rate on the 30-year is lower than the rate on the 50-year, your payment is still $372 less per month.
There you go.
So if somebody could not afford, and this is something each family has to decide for themselves. If somebody could not afford 4732, but they can just barely afford 4360, isn't it better that that option is at least there for them?
100%.
Yes, they're going to pay more interest over the life of the loan, but maybe they're just more interested in buying a house, and at someday, if they don't pay it off in full, at least pay it down enough that their children can take over the mortgage and have the price basis locked in at what they bought it at versus having to pay the price of the home of what it's going to be 20, 30 years from now.
Absolutely agreed. 100%. Dave, you tell me, not only that, how many people do you think will actually keep that 50-year loan for 50 years? I don't think very many.
Well, that's another very important statistic because the average person keeps their loan the average consumer that buys a home keeps their loan between 3 and 5 years.
Right. Exactly.
Now, there are exceptions for people that got rates in the 2s and 3s back when COVID hit. And those people will probably keep their mortgages a lot longer because they got typically low rates. But in an average market, the average consumer keeps their mortgage between 3 and 5 years. So there's a very small percentage of consumers that actually hold on to their mortgage for the entire 30-year mortgage.
Right. And then additionally, most people are not keeping their homes really for more than 8 to 10 years. And they maybe.
Yeah, and I didn't mean to, sorry, I should clarify. I'm not talking about how long they actually keep the home. I'm talking about how long they actually keep the loan because the average consumer refinances between 3 and 5 years if they don't sell them.
Correct, Dave. And I'm adding additionally, forget that. Yes, there's that along the way while they have the home ownership. And then within 8 to 10 years, typically they sell the home or they move on to something else. Work moves them across the country or across state or whatever it's going to be, or they get the home paid off eventually. Maybe there's some inheritance comes along and they just pay that bad boy off. That happens too, right? So besides the refinancing, how long are people actually going to own the home or keep the mortgage altogether? It's usually 8 to 10 years before they make a move.
Well, I think one of the things that I struggle with, and this is not just with home mortgages, a lot of times regulation comes in to prevent certain products from hitting the market because the premise is the average consumer isn't intelligent enough to make a good choice.
Ouch. Ouch, average.
And I think that is not a fair statement. I really think that is not something. It's like saying, well, we put chocolate out there, we put cigarettes out there, let people make a choice about that.
Right.
Why don't we put a 50-year mortgage out there and let people make the choice? In other words, by not putting the option of a 50-year out there for people to choose from, that is actually, in a way, making a statement that the average consumer doesn't know well enough to choose a 50-year mortgage and what's right and wrong.
Yeah.
And I disagree with that premise.
Yeah.
I think if you put a product out there and you educate the consumer about what are the pros and cons of this, I mean, think about it. We went through exactly the same thing decades ago with the 30-year mortgage. When it first came out, when people saw what they were going to pay, I still see people that look what they're going to pay over the life of the loan and they're like, oh my God, I'm paying that much.
Yeah.
I said, okay, well, do you have cash to just buy the house for cash? Then you won't pay any interest.
Right. Yeah.
Well, I don't have that kind of cash. Okay, well, there you go.
It's got to be really interesting. Even your first time home buyers, especially, they come in what an education. They are enlightened quickly and come walking out of your office like, oh my God, right? What are we trying to get ourselves into? And then they go for it, they get it in there and they gain some equity and they keep the house for a while. And then it's time to move on to the second home or upsize, right? And now they might come back in years later, but again, it's like a refresh of everything and maybe with some new interest rates. And now they're looking at higher costs of a home that they're going to move into. But at least now they've got some equity they can work with from their first home.
Well, some of these choices also, I think, have a certain amount to do with age bracket. Like when you've got someone in their 20s or 30s that's purchasing a home, they're looking at the monthly affordability of it. But when you get to your 60s or your 50s, your 60s, your 70s, then you start to think more, maybe I should have a shorter term loan so that at least I'm close to paying this off before I,
Right.
So there's so many factors that go into it. But from a broader perspective, I'm a believer that you give people options and you put them out there. They're not forced to take them, but at least they should have the option if they want it.
Right. And Dave, let's talk about
So
this real quick so people have a good
answer your question. If I had the option of taking a 50-year mortgage and I like the payment, I'd take it.
Okay, gotcha. And just to kind of
With 33 and a half years experience doing this.
And just to shed a little bit of light, Dave, on a new subject too about regarding this, as in this amortized schedule that people have on these mortgages, which there's no way around it. There's no other option there. That's it. You get an amortized schedule, and it all means that the interest is uploaded up front. Loaded, that you're going to be paying mostly interest for the first, I don't know, 8 to 10 years typically. And then at what mark in a 30-year mortgage, Dave, does it start to lean more towards principal, or at least a 50-50 mark of interest and principal payment? Because when you're making those,
About 2/3 the way through a 30-year loan. On a 30-year loan at about the 20-year mark, your payment is 50-50.
at the 20,
So for the first 20 years, it's not an even straight line. It's a logarithmic curve. It's a sort of, it would be hard for me to illustrate, but I could pull up a graph at some point and show you maybe on our next chat.
Dave,
But if
our
you were
audience,
to-
our audience, they get this. They understand that. They're with us on this, man. Let's go.
And at this point, I would say if you go 20 years out, like if you kept a mortgage for 30 years, by the time you hit 20 years, your payment will go from being largely interest to and small principal at the beginning.
Yep.
With every payment that you make from day one, every payment you make, a little bit more goes towards principal, a little less goes towards interest. And about 2/3 the way through the loan, more or less, that's exactly 50. Once you get, excuse the fire engine in the background.
Hey, you look.
Once you get,
what do we expect?
once you get past the 50-50, the 2/3 mark from the 20th to the 30th year, you're now in a place where you've actually got more of the payment going towards principal and less of it going towards interest. And the very last payment you make is almost all principal and virtually very little interest.
Interesting. Something else. So very advantageous for a homeowner with this mortgage to make extra principal payments as much as they can. Like you were saying earlier, you're having some good months, you're making some extra money, you feel comfortable, write that extra check towards principal. Don't double your payments. Just write a separate check to the principal only. And if you did that once a month, maybe, divide it by 12, right? And then take that and pay that monthly. You could also save it up and just make one extra payment at the end of the year. And that will trim off typically on a 30-year mortgage, Dave. I'm understanding somewhere between 6 to 8 years. That sound about right to you?
Correct.
Yeah, if you hold that.
Correct.
Yeah, but it would be better if you divide it by 12, that one payment. If you're only going to do one extra payment a year, divide it by 12 and make it monthly. Whatever that number is monthly, do that.
Correct. If you can afford to do that, because then you're accruing interest on a smaller principal every month.
Yeah, if you have a $2,400 mortgage, just take $200 a month and pay that monthly, and that's going to trim down the interest faster. So that's something to think about.
Faster than making one $2,400 payment at the end of the year. Correct.
I am just blown away back before this or during the Great Depression, where we had, 50% down payments and 5 to 10-year loan limits. I mean, that's just insane. But here's an interesting thought. You're all probably going, well, yeah, but what did houses cost back then? Well, my numbers here show back then we were looking at 1930, $7,000 for a house. $3,500 down, working and rolling into a $7,000 house. What would that be equivalent to today? $130,000 house. 1933, you're looking at $5,700, so it dropped down a bit. You're about $120,000 equivalent in today's numbers. And then 1939, $6,000 to $8,000. So we're getting back up there. I'm sorry, $8,500. So you're about $130,000 equivalent for today's numbers. Pretty interesting, though, right? What the costs were then to today. Can you believe it?
I'll just give you a little example. The very first home that I bought many decades ago, I think in the late 80s, the lady that I bought it from was the original owner, and this is actually in a part of Glendale. She bought the house. She and her husband bought the house for $3,500 in 1926. I bought that house for $200,000 in 1988. And today that same house will appraise for roughly somewhere around 1 million, give or take.
How about that?
So that just gives you a little bit of a perspective of how prices have moved.
Exactly.
But nonetheless, from a theoretical perspective, I fully agree that if the affordability is a concern, there is no reason for all this drama and backlash and all kinds of upheaval and yelling and screaming and throwing hands up in the air about a 50-year mortgage.
Of course, right?
Nobody is forcing you to take it. From a purely theoretical perspective, I would say if you can afford a 30-year, yeah, then take that.
Right.
But if you cannot afford a 30-year, then your choice is either take a 40 or a 50-year or don't buy a house. Well, then you decide.
Right. Yeah. Yeah. You either pay cash, you do a 15-year, a 30-year mortgage, and now you potentially got an option of 50-year mortgage. So you've got a lot of tools you could work with, and that's going to make way more options for people to do. And by the way, Dave, too, how many people coming to you that want to actually not do a 15 or 30, maybe they want to do 25 or 10? You get that often.
There are many of those. The interest rate difference is just not enough. And so what I typically tell people is exactly what you and I just talked about on the 50-year. I tell them, look, take the 30-year. It's got a lower minimum payment.
Right.
And if you have a month where you can afford to, I can tell you right now what the 25-year amortization is, but at least you're not locked into it in case you have an expensive month. Like Christmas tends to be, December tends to be an expensive month for a lot of people.
Right.
Because of Christmas. So you can pay your extra $200 during the rest of the year, and in December, take a break and just pay the minimum payment.
There you go. Yeah.
You don't have that option with a 15 or a 20 or a 25-year loan because you're strapped to that higher payment, whether you like it or not.
Right.
So it really all comes down to affordability. If you can afford a 15-year payment, yes, that's the best deal. But if you cannot afford 15, if you cannot afford 25, if you even cannot afford 30, then maybe a 40 or a 50-year amortization is just not such a bad idea because you're not strapped to it. You still have the option to pay extra.
Right. Right. I do want to clarify something I talked about earlier, talking about the house in 1930 bought for $7,000. That would equate to around $130,000 today. They're talking about inflation on that number. So I want to clarify that. But I'll show you another number that makes more sense. If you back then had a $6,000 average home price, that would equate to today's numbers. We're talking 2025, right? To a $420,000 home, just to give you some perspective on that. So the other numbers I was talking about was inflationary numbers.
Well, I hope you found this dialogue and this exchange somewhat helpful. I think in a lot of terms, things should be looked at factually, and we just have to take out the drama and take out the backlash and take out all the yelling and screaming and the hand wringing and really just look at the numbers.
Yeah, definitely, 100%. And I'll share this with you too. I hope that helps. Reach out to Dave or myself if you have any questions at all. And we could also, answer those for you or point you in the right direction. Now is a good time to buy. If you're out there listening, you're on the fence, you're thinking about it, you're hearing all these crazy things going on in the world, which hasn't really changed much. We're always hearing crazy things. We just have to digest them for a little bit, talk to some professionals that are, being straightforward with you and make a decision from there. But there's a lot of options on the table. There's even more options potentially coming real soon. And this is a good time to buy. It really is. Interest rates have improved a bit as of late, and prices are holding. They're not necessarily jumping up. They're not going down really, but our inventory, I'm seeing markets start to pick up. We're seeing a little bit more buyer activity starting to happen already. And then we got the government shutdown coming to an end here. And I think we're going to see even a little bit more of a pickup. So keep an eye on that. And if you are thinking of buying, hey, let's at least start talking about it, right? What do you think, Dave?
I think it's an excellent idea. And while you're thinking about buying and while you're talking to Cash about the real estate perspective, there's absolutely nothing wrong. As a matter of fact, it is to your advantage to talk to a lender or a banker such as myself, just to get an idea of what the options are, what programs are available, what questions you have, what you qualify for, and maybe even get yourself set up so that by the time you're ready to pull the trigger on something like that, you've optimized your situation. And as always, Cash, thank you so much for having me. It's always a pleasure to be on the show. And I'm very sure that your listeners will find this very helpful for them.
Absolutely, Dave. Thanks so much, buddy. Have a great rest of the day.
Thank you, sir. You too. Bye-bye.
This the place where the info don't stop. Cash talks, yeah, it don't stop. Real talk, real keys, real goals on lock. From downtown dreams to the burbs of blocks. Turn a key, feel the beat, that's Cash Talks.